Hey everyone, it's David Sirota. So an interesting update from New Jersey. 4 years ago, I reported a big series on how the Christie administration in New Jersey was spending more and more money, more and more of retirees' pension money, to hire politically connected Wall Street firms to manage the state's massive public pension fund. It was up to $400 million a year back then that New Jersey was paying in fees to private equity firms, hedge fund firms, real estate investment firms, venture capital firms, many of them whose executives had been making major donations to Republican organizations that were connected to Christie. There was a big question about whether the investment contracts were worth it. Were they generating enough of a return for New Jersey's pension fund to justify these huge fees? And there was a big argument in the state that included ultimately legislative hearings, a push for new legislation about fees. There was a big debate about whether it was worth the fees. There was also a big question about whether the contracts were being awarded on the basis of political favoritism rather than on the basis of merit. So into all of this came Phil Murphy, who is now the Democratic governor of New Jersey. He campaigned for governor last year, in part on a promise to reduce fees at the state's pension fund and to basically pull the state out of these risky hedge funds and private equity firms. Now, what was interesting about this was that Murphy previously had served not only as an ambassador, but as the head of Goldman Sachs. So there were questions about whether he would be a guy who would court Wall Street and be as close to Wall Street as Christie. But he campaigned, after all of those headlines about Wall Street fees at the pension fund, he campaigned promising to pull the state out of its hedge fund and private equity investments. Some people didn't necessarily believe that the former head of Goldman Sachs would ever do that. But there was news late last week that Murphy has started to actually follow through on this promise. The state's pension overseers have effectively frozen any new investments in hedge funds and private equity. And remember, this is a massive pension fund, a more than $75 billion pension fund. So this is a lot of public money, and it's part taxpayers' money and part retirees' money. It's for those retirees, current and retired teachers, firefighters, cops, and the like. And Murphy, it appears, is following through, at least taking the first step to follow through on a plan to basically say that New Jersey taxpayers are not going to be, at least through the pension fund, investing in these risky hedge funds and private equity firms. So it's worth always following the money. And when we originally reported that story about those fees and Christie, the Newark Star-Ledger said it was a, quote, curiously overlooked story, involving hundreds and hundreds of millions of dollars, ultimately over the years, billions of dollars. And it's always worth, when you're following the money, to follow through and see if the people who are making campaign promises are actually following through on those promises. And here you have an example of a new governor, a new Democratic governor, who came in making a promise to reduce the payouts that New Jersey has been making to these politically connected, very wealthy Wall Street executives. He has made that promise, and it looks like he is taking the first step to following through on that promise. Now, again, this is a huge amount of money, right? You hear a lot about what goes on in Congress, and that in Congress there's a lot of money that's sloshing around there as well. You don't often hear about the money at the state level, and much of that money, though, is in these pension funds, these giant multi-billion-dollar funds that are designed to basically finance the retirement benefits that are promised to public employees when they are hired. This is money that the state is an employer, the state kicks in money, the workers themselves kick in money, and it's supposed to basically finance their retirement benefits that they are promised. And those benefits are often promised in lieu of salary up front. So there's a huge amount of money in states and cities all across the country in these funds, and it has become one of the biggest places that Wall Street makes its profits from. The fees that Wall Street firms earn from managing these giant sums of money. And in New Jersey, it was one of the biggest examples of where the state was paying a huge amount of money for returns that critics were arguing weren't even beating overall the stock market, that you could get better returns by just putting the money into a low-fee stock index fund. So here you have an example of a new Democratic governor who has promised to take action on this and appears to be taking the first step. Will he follow through? It's a good question, and it's worth watching because, again, Murphy was the head of Goldman Sachs, not exactly somebody who isn't personally, at least, friendly with Wall Street, but he is taking the first step to cutting down on those fees. And I think that if he continues forward on this, that it will become something potentially of a national model, where you have a governor with ties to Wall Street, who, by the way, clearly knows how much Wall Street is making off of these kinds of fees. You have a governor who has gotten into office, campaigned on reducing these fees, and is taking that step. It could be an inspiration to other governors across the country who are looking for places to save money and are overseeing pension funds that have deficits that can't afford to continue paying huge fees for middling returns. Keep watching this story. We're talking about tens and tens of billions of dollars just involved in this one state. And ultimately, if Murphy is successful and other states follow suit, you're talking about a potential shift of hundreds and hundreds of billions of dollars.